In this class, I'm going to review the importance of the hourly moving average. We have the hourly moving average on our intraday charts by simply adding the containment bands. And the containment bands have the hourly moving average by default in the middle in gray, and then they show the upper and lower containment bands, which most of the time contain price. Typically, when a currency trends up, when it comes down to the hourly moving average, it will find support, and if the trend was significant and is likely to continue, it's going to find support there and start to go back up. But when it fails to go back up, usually, and when it comes back underneath the previous low, like right here, you can see a big trend develops in the opposite direction. Here you have the exact opposite. The euro-dollar was trending down, it rallied up, found a little bit of resistance here at the hourly. Once it broke through there, the trend was to the upside. So we use the hourly moving average in many ways as a filter, as a place to get into trades. If you had gone short right there, as soon as it goes above the hourly, you know you're wrong, and you might want to wait for it. A lot of times it goes above the hourly, comes down and does a retest right here, and then it continues. Other instances, you can see if it came to that level before, tried to rally off of there, failed. As soon as it breaks down right here, you can go short. And if you notice, our intelligent trailing stop did a pretty good job of getting you out of this trade right here at 27, short of 68. That's about a 40 pip win. And you got a little bit of a pullback right here that you could have went short again. Notice the FX Trend Pro had incredible weakness. So basically, the two types of trades you're looking at are when a trend is very strong and it comes back to the hourly. If it finds support there and starts to go back up, you can get in the trade. In this instance, you'd be long right here at 73 with your stop underneath the low here. This one started to go back up, but guess what? There is no strength. Once you get into these trades, you should see some momentum coming your way relatively quickly. Let's look at some of the other charts. This one, you can see acted as resistance yesterday morning. Came out to it. You go short, and you can see it fell back. Came up to it again. If you went short, you didn't make much on the second trade. Once it breaks from underneath above the hourly, it tends to trend up. And if it gets hit twice without making a lower low, without going below this low here, it's pretty likely that it's going to go to the upper bands. And you can see today it pulled back to this area here. The only difference is we have a counter trend signal right here that is very likely to be the end of that up move. So if you bought right here and you see one of these patterns, you want to get out of the trade. And if it goes sideways right there and then finally comes back down underneath these lows and breaks the previous day's high, previous week's high, it's likely to go to the lower bands. Here you can see the exact same thing. This one last night went from below to above the hourly, and then it continued trending on up. Came down to the hourly and found support, which most of the time it does. Rarely does it just come and explode through the hourly. It usually pauses there for 15 to 30 minutes, sometimes 2 hours. If you don't get a bounce off of that hourly moving average, it's very likely to go the other direction. If you're short here at 44, you can see, our trailing stop got you out of here at 08 for over a 30 pip win. This one broke from below to above the hourly last night and kind of went sideways. And you also have a narrow range pattern right here. When it broke out, it exploded up. And so when it comes down to the hourly, it's likely to find some support here. In this case, it went through it by about 10 pips, found support at the whole number. And as soon as it went back above this high right here, you go long at 15 and went all the way up to 46, up 30 pips. This is a good example. It exploded through the hourly, and this one didn't even give you really any chance to get in this, and the weekly and monthly trend are down. But once this pattern happens and it's not up statistically too much, you can get into a trade like this little pullback trade right here, little mini wedge pattern. You get in, extreme strength on the way up, no weakness whatsoever. You draw your fibs on that last wave, and here's your first profit target, and here's your second. You can see it only went a few pips above there. Most of us, when it's above the upper containment band, are going to just get out of the trades right here around 92.10. You're in this trade at 76. You made 34 pips, and you would put your stop a pip or two underneath the low, which in this case is less than 10 pips. So the real key to trading is small losses and bigger wins. And anytime you can take trades that give you 2 times, 3 times, sometimes 5 times bigger wins and losses, it really helps get rid of all the trades that don't work where you lose money on. Here's the dollar CAD. And this is a nice trade because a lot of times you're not necessarily going to buy it when it breaks out above the hourly. But when it comes up to another resistance area, in this case yesterday's low, comes back down and finds support here. We also have the monthly and weekly pivot level there, and the whole number, which in this case is also parity. It's a very high probability trade when it busts through here. You go long and you put your, these are your profit targets. Even if you got out of it right here at 31, you're in at 13, you got 17 pips while risking less than 10 pips. So that's a really high probability trade. This one, last night, broke above the hourly and found support. When it starts to go back up, you get in. And in this case, later on in the day, it didn't have off the charts momentum. As you notice, there's a few bars of plus 80 strength, but then it pulled back. And anytime you can get into a trade in the middle of the range, right near the hourly, let's say you went short right here when it broke through the low, you draw your fibs on here, and here's your first and second fib target of that trade. Oops, let me see, I didn't draw that correctly. There we go. So if you got out of this trade right here at 02, you got about 10 pips while risking 10 pips. Not the best trade in the world. This one came down and found support. If you were to buy this when it went back above here, notice it went up with almost no momentum compared to the weakness. And so when it comes back down underneath the hourly right around 06.35, you go short. You draw your fibs on the previous swing. And again, the fib targets are excellent places to get out of this trade. You're short here at 33, out at 02 for a 30 pip win.